What's in store for the stock market for the rest of 2024? Is it in a bubble about to burst, or will it continue to grow? I tried to answer these questions with quantitative analysis on decades of historical data. If you're interested in learning about my analysis more in depth, you're welcome to check out my Substack. There, I wrote an article describing what I did in detail with lots of graphics that illustrate my findings. I've included the link in the description. But now, join me in uncovering what lies ahead for the stock market in 2024. Let's start with some background and motivation for this analysis. In some previous work I did, I applied cluster analysis to historical stock market data. The results show four distinct patterns that repeat over decades. Bearish, where the market suffers a large drop during bearish years. Flat, where the market makes big fluctuations with no clear direction during flat years. Bullish, where the market makes gains during bullish years. And very bullish, where the market makes big gains during very bullish years. These market patterns display predictable ups and downs that occur at the same times each year. Recognizing repeating patterns with consistent cycles can be crucial for investors. Hence, identifying predictable market moves can help with making more informed decisions. The cluster analysis uses historical data from 1994 to 2023, which are complete years from the past. As of this episode, 2024 is currently in progress, so it would be great to predict if 2024 will be a bearish, flat, bullish, or very bullish year as soon as possible. Foreseeing potential market trends early allows for more informed investment decisions. Using historical data and cluster analysis results, I predict this year's stock market trends in 3 steps. Step 1, I find look-alike years, which are the past years that have similar market patterns to 2024. Step 2, I use the lookalike years to map the 2024 market pattern. Step 3, I use the 2024 market pattern to forecast the stock market landscape for the rest of the year. Through these efforts, I show that 2024 is likely to be a very bullish year. Lookalike years from the past that map to 2024 had strong returns ranging from 18 to 34%, with a median of 27%. To start this analysis, I had to get stock market data. I downloaded the daily price data of the SPDR S&P 500 ETF Trust, or SPY for short, from January 3rd, 1994 through February 29th, 2024, using Yahoo Finance. SPY is an exchange-traded fund, or ETF, that tracks the performance of the S&P 500 index, a popular stock market index. I used the SPY historical data for deriving the 4 market patterns in my previous analysis that I map in step 2. It is important to use the SPY again when analyzing 2024 to be consistent. I base my previous and current analysis on the S&P 500 because it represents 500 big companies from different parts of the US economy. Due to the size and diversity of the S&P 500 companies, people follow the S&P 500 to understand market performance. Hence, analyzing the S&P 500 is a good way to map the overall financial landscape. Next, I had to prepare this historical data for analysis. Preparing the data is important to get the most accurate and useful results. It involves taking the raw SPY price data and putting it in a different form. This transformed data is what I plugged into the analysis steps that follow. I transformed the raw data by putting it on a scale, i.e., normalizing it. I discussed this approach in my previous analysis. For this analysis, I used the same approach to normalize data for January through February of all the years from 1994 through 2024. This approach yields normalized closing SPY prices. I only used January and February data for all of the years because I am searching for 2024's lookalike years based on January-February 2024 data. As of this analysis, January and February are the completed months of 2024. That takes us to step 1. Finding 2024's lookalike years. To find 2024's lookalike years, I calculated correlation coefficients. I used the normalized SPY closing prices of January through February of 2024 and January through February of the past years. This approach reveals which past years have market patterns like 2024's. So what are correlation coefficients anyway? Correlation coefficients reveal how similar or different the years are. If the price patterns tend to move up or down together, there is a positive correlation. If they move in opposite directions, there is a negative correlation. Otherwise, there is no correlation. The closer correlation coefficients are to 1, the more similar the patterns are. The closer the correlation coefficients are to -1, the more opposite the patterns are. Correlation coefficients close to 0 mean the patterns have no correlation. Now I had to get the correlation coefficients. I performed a correlation analysis between 2024 and every other year using the SPY normalized closing prices. Specifically, I calculated the correlation coefficients for Jan-Feb 2024 versus Jan-Feb of every other year, meaning correlation coefficients for Jan-Feb 2024 versus Jan-Feb 1994, Jan-Feb 2024 versus Jan-Feb 1995, all the way to Jan-Feb 2024 versus Jan-Feb 2023. At this point, I had 30 correlation coefficients. I had to figure out which ones are likely to be real or statistically significant and not due to random chance. Random chance, stemming from the world's complexity and uncertainty, can produce misleading results. Accounting for it can lead to more accurate and meaningful findings. I calculated correlation p-values to assess if correlations occurred by chance. Then, I corrected for multiple testing, because I calculated multiple correlation coefficients, to ensure correlations are more likely real. I deemed correlation coefficients with corrected p-values below 0.05 to be statistically significant. After accounting for random chance, I was left with 16 statistically significant correlations. Since I am interested in past years with similar price patterns to 2024, the correlation coefficients of lookalike years must 1. Be statistically significant, and 2. Be greater than 0.5. The first requirement ensures correlation coefficients are not due to chance. The second requirement ensures that lookalike years have strong correlations to 2024 and hence comparable price patterns. 13 years satisfy the filtering criteria to be lookalike years. Most have correlation coefficients above 0.8. Most lookalike years come from the very bullish market group, that's 8 out of 13 of them, but there are also 1 bullish year, 3 flat years, and 1 bearish year. Lookalike years' price patterns resemble 2024's. All show an overall upward trend. Most show small dips around trading days 10, which is roughly mid-January, 20, which is roughly the end of January, and 30, which is around mid-February. Many show the upward trend leveling off around trading day 35, which is around mid-February, through the end of that month. These results show that using correlation coefficients to find lookalike years is promising. That takes us to step 2, which is mapping the 2024 market pattern. Based on January and February price data, 2024 has 13 lookalike years from all 4 market pattern groups. To predict what could happen with the stock market the rest of this year, I needed to figure out which group 2024 likely belongs to. My approach was to identify the group that's more common in the lookalike years relative to what's expected from all the historical years combined. I deemed this overrepresented group to be the predicted market pattern for 2024. This approach minimizes the likelihood of the predicted market pattern being due to random chance. Following this approach, I compared how many times the market pattern groups occur in the lookalike years to how many times they occur in all the historical years. The very bullish group is overrepresented in the lookalike years, occurring 61.5% of the time, relative to all the historical years, where it occurs only 40% of the time. So the very bullish group occurs a whopping 21.5% more in the lookalike years relative to all the historical years combined. The rest of the groups are underrepresented in the lookalike years. These results indicate that 2024 is likely going to be a very bullish year. As I mentioned previously, it's important to account for random chance in results. Although the very bullish group occurs 21.5% more in the lookalike years relative to all the historical years, I wanted to understand how meaningful this finding is. To account for chance, I implemented a simple bootstrapping approach. I simulated random results to compare to the actual result. That way, I could assess how likely the actual result is due to chance. I selected 13 random years, which are the same number of years as the lookalike years, from all 30 historical years. I calculated how frequently the very bullish group occurs in the randomly selected years relative to what's expected using all the historical years. I noted if the result with randomly selected years equaled or exceeded 21.5%. the actual result, which is how much the very bullish group occurs in the lookalike years relative to all the historical years. I repeated this process 100,000 times to sample many sets of 13 random years. Out of the 100,000 iterations, the relative proportion of the very bullish group equaled or exceeded 21.5%, roughly 4,000 times. That means an overrepresentation of the very bullish group occurs due to chance only about 4% of the time. Hence, it is not likely that the very bullish prediction is due to chance. To get a sense of what to expect for the rest of 2024, I examined the lookalike years from the very bullish group more closely. These years have a markedly higher return than the rest of the historical years, ranging from 18 to 34%, with a median of 27%, in comparison to a median return of just 6% for the rest of the historical years. I overlaid the normalized closing prices of the lookalike years from the very bullish group to observe high-level market patterns. These years have a consistent upward trend. They exhibit sharp dips around trading days 75, which is roughly the end of April, 140, which is roughly the end of July, 168, which is around the end of August, and 206, which is around the end of October. Based on these results, the forecast for 2024 is strong gains with possible dips every few months. In this episode, I presented a 3-step analysis to predict what to expect for the stock market for the rest of 2024. First, I used historical SPY data to find 2024's lookalike years. Then, I mapped the lookalike years to recurring market patterns I identified in my previous analysis. I used the mapping to predict 2024's likely market pattern. Last, I examined the lookalike years in the context of this market pattern to try to make more detailed projections about 2024. If the predictions from this analysis are correct, 2024 will be a very bullish year with a robust return.